So the main one is the interest rates, right?
Not really. Like, that's where everyone's looking, but I think the big one's actually the GDP and growth data outlooks, as well as employment numbers. Because the one thing that we know about right now is the market is betting higher on higher risk assets like crypto, even though interest rates aren't coming down. So that kind of tells you that the market is ready to go out on the risk curve, even without monetary policy really easing any meaningful way than what it might be expecting. So I think even if we get no rate change, which I think is a likely outcome, as long as everything else comes in as expected, next month should, at least for the start of next month, continue to see a lot of the strength we've seen hopefully this month as well.
Okay, guys, welcome back to another episode of Tapping Into Crypto. My name's Ted, and I'm joined by the lovely Pav. Pav,
good to be here.
You've just had one of the all-time great,
what a stumble,
great
what a
bloopers.
tumble.
Yeah. As we started, Pav just decides to knock over the plant, and everything, soil goes flying. But
sacrificial plant. Sorry.
Take two.
Yeah.
Take two. We're here. So we've got a lot to cover today. So to sort of recap or to preview what we're going to cover. So markets are down. I know you've got some strong thoughts on why that's happening. And where we go to next. I'm actually going the opposite way. So make sure you stick around for that.
You don't know what I'm going to say yet.
I do. I can read your mind, Pav. The next segment will be about Treasury companies.
If you could have told me the plant was going to fall, that would have been nice.
I can't look into the future.
Okay.
So the Treasury company narrative, which is been playing out week to week, and it's really starting to pick up steam. So we're going to do a big deep dive into that.
I think this is a big one. A lot of people might hear it and not really quite understand it. So I'm actually quite excited to at least break that apart in 2 or 3 points. I think everyone should be able to understand it after today.
Absolutely.
Yeah.
And then lastly, we'll discuss what's happening in the US, particularly around regulation. I know there's some key dates coming up.
Some more stuff happening.
Yeah. So we'll try and keep that engaging and exciting because
I'll keep it short, but you want to know about this. Yeah.
We'll definitely tie in how it impacts the market.
Yeah,
so
100%.
Big episodes. Let's dive straight in. So just to recap, since we last touched base last Tuesday, so what happened? We had a BNB all-time high.
We did.
That's the third major coin in the top 10 that's hit an all-time high this month.
XRP the previous week, I think.
Yep. So, and of course Bitcoin.
Yep.
So I guess we will wait and see what's next, whether it's ETH, whether it's Sol,
Come on, ETH.
Doge, Cardano. I forget what's sort of in that top 10 these days.
Yep.
But the main story is altcoins are bleeding. So
Blood in the streets.
There is blood in the streets. So XRP, Doge, Pepe, to name a few, all down sort of 12 to 17% over the last 7 days. Yep. So what's happening, Pav?
Yeah, like I sort of shouted out last week, I saw some weakness across Bitcoin. And then from the rest of the week, one telltale sign for me that things are getting overheated is when Bitcoin takes a breather, but altcoins really start to hammer fast. And if everyone remembers the earlier part of last week, we saw double-digit gains across heaps of altcoins. Pengu, I think, for example, I remember vividly, put in that all-time high in that move as well. So since then, we've obviously seen a bit of a cool-off even in altcoins as well. Starting off this week, it's looking a little bit like red as well. Like we talked with blood in the streets, double-digit losses across those altcoins. But, a lot of it for me comes down to the end of the month. That can always be a period where we do see profit taking. We've seen a blistering rally. Still a lot of these coins that are down 15, 12% this week, they're still up 20, 30% in the last 30 days. So we spoke about this last week to length, some people to sort of have a strategy in crypto, you've got that longer term mindset, but also a shorter term mindset. You might be looking at opportunities to shave some profits off the table, like I took to last week. So this was an example of what we're probably going to see more and more of as the market starts to continue moving up. But to address the fact, the market's not over by any means, but we will continue to see these little burps or hiccups or whatever you want to call them just over the course of the next, let's call it 6 to 12 months, because we don't exactly know. But I think, just the fact that we've also got a big, massive week in the macro regime as well. We're getting some latest data prints out this week. It's literally between Wednesday all the way up until Friday, massive releases out of the US. Where all eyes are fixated on in terms of where's monetary policy going next.
So the main one is the interest rates, right?
Not really. That's where everyone's looking, but I think the big one's actually the GDP and growth data outlooks, as well as employment numbers. Because the one thing that we know about right now is the market is betting higher on higher risk assets like crypto, even though interest rates aren't coming down. So that kind of tells you that the market is ready to go out on the risk curve, even without monetary policy really easing any meaningful way than what it might be expecting. So I think even if we get no rate change, which I think is a likely outcome, we're still, as long as everything else comes in as expected, next month should, at least for the start of next month, continue to see a lot of the strength we've seen hopefully this month as well. So that's kind of my key takeaway of why the market might be risk off, just broadly speaking. And, just because those data releases are coming out, it's not exactly crypto people that are selling. It's, you see selling off in like equities markets, which are at all-time highs right now. That also just has a, just an ebb and flow effect onto crypto eventually, just market sentiment wise. So pretty good to see.
Yeah, and I think you mentioned it there, like we're seeing all-time highs in the NASDAQ, which is a stock exchange in the US that mainly tracks like, high growth tech stocks,
top
so the likes of Facebook, Google, Apple, all those. So, and that's just in an all-time high, I think yesterday. So that's pretty massive. And a lot of people group in, high growth tech stocks with crypto because, as you said, they're considered risk on. Maybe crypto's like the next level up of terms of risk. But often, if one of them's doing well, the other will do well as well. They're not a completely correlated asset class, but typically we'll see that play out. So, I mean, why is that happening? Because I think people may not have heard it, but Trump came out yesterday and called it the biggest deal ever with the EU. So what they've called for there is it's basically, they've done a deal, the EU and the US, 15% tariff on most goods imported from the EU. But there's some other key things. So like the EU is going to buy up to $750 billion worth of US energy. And the EU is to purchase vast amounts of US auto, so cars. If you're looking as just a objective point of view, that's probably a win for the US, and hence why, the US stock market's doing so well. So will we see that trickle down into crypto? I hope so. But I know you see short term, you're saying it's more, looking nasty.
What's that? The crypto markets?
Yeah.
No, that's what I mean. I don't think you know what I'm thinking. Like, I think what we saw is kind of done. Like that little blip that we've seen. As long as everything comes out the way it should this week in terms of data releases and what the market's expecting, I think we're going to continue to see a lot of the pressure that we've seen to the upside continue. The only thing I'd say maybe is the way that Bitcoin dominance, the chart that we look at quite a bit, is shaping up. It's actually at some pretty key lows right now. So if anything, I might say that the next big run that we see could be a move back into Bitcoin rather than we continue to see altcoins start to continue to charge. So that's kind of where my focus is more moving back to Bitcoin now, which it has been notably cooling down. It's been bouncing between 119, 120, somewhere there, consolidating. But yeah, I think this is a pretty big week. And the one other thing I'd say, we're going to talk about it quite shortly, is there's some big news coming out of the US that might actually put some, the tailwinds right into the back of Bitcoin as well. So yeah, we'll talk about that soon.
I think that needs to happen because we talk about like rotation from Bitcoin down into ETH, down to altcoins, right? But these days the rotation is so quick, and it's almost like Bitcoin doesn't get the cycle it deserves. Like we've talked about like Bitcoin, hitting new all-time highs into sort of that 150k US plus region.
Sorry.
But we haven't even, we passed 120 but came down below. It just seems like we haven't fully seen that, Bitcoin run play out before we can have a full proper altcoin season, if you know what I mean.
No, I back that because I think we're just seeing a whole new market. Like the people in the market right now, it's completely different to 2019, 2020. I feel like if we were in the mindset and like the people that were in the space back then, you would have just seen Bitcoin go and probably not really stop until it did something silly, right? Right now, you just see, if you just look at Bitcoin since 2023, it's like up, sideways, up, sideways, up, sideways. And people might be like, oh, when's it going to go? It's been going for like 2 years. And that's the other key thing I'd call out too. Like we're probably closer to an end than we are a beginning of this bull market cycle. And that's where things get the most frothy, they get the most exciting. We start seeing all-time highs on altcoins like you're talking about. I think ETH hitting a new all-time high is going to absolutely just send the lid off of everything.
That's what needs to happen next.
Yeah. And if that goes, that's when we really you can't go back from that, I feel. Especially if everything else stays and maintains. In terms of the macro sort of playing field, like everything stays in growth mode, it's going to be a great period for crypto investors heading into the back end of this year. But that's where you got to be cautious too, because as much as people talk about this, I don't know how you feel about it, like the whole 5 year super cycle business, or like we're just getting started. It's going to be like the gold ETF. I'm still of the opinion that if it happens, great, I'll get back in, but I can't, for the life of me, watch everything go up and then just watch it come straight crashing down again.
Yeah,
So.
you can't make that mistake again. And I think a lot of our listeners will feel the same. Like they're looking to capitalize over the next sort of 3 to 6 months. And unless something else completely plays out differently, then that's sort of their exit point. So you talked about, altcoin all-time highs. And one of the key catalysts for that is we're seeing Treasury companies come out. I think the initial one was MicroStrategy.
Yeah, that was a big one. Put
obviously,
it on the map.
They started acquiring Bitcoin as sort of their new approach to generating revenue, and they completely pivoted from being a tech company to a Bitcoin acquisition company, right? Now we've seen, like 4 years later, we've seen more companies do the same thing with Bitcoin, so like Metaplanet and the likes, but now we're seeing that starting to rotate into Ethereum. So we've talked about in the last few weeks, I think Starlink Gaming's been the big ETH Treasury company. There are a few others who are just stockpiling vast amounts of ETH, which is part of the reason why ETH has performed so well in the last 65% in the last 30 days, I think. But that it doesn't stop there, because we're seeing treasuries injecting investment into other altcoins. We've seen companies launching XRP, Solana, Sui, even hyperliquid treasuries.
BNB.
BNB, of course. Should have mentioned that one. That just recently hit a new all-time high. And so what this means is a lot of these companies, not all of them, but a lot of them are publicly listed companies on, whether it be the NASDAQ, New York Stock Exchange, or another stock exchange around the world. And so people can, they're utilizing sort of crypto and stockpiling crypto to generate revenue. But also the one thing that you can't do as well with Bitcoin, or you can't do it all with Bitcoin, is staking. So staking ETH, staking Solana, you can generate huge amounts of revenue through these. So you're not just betting on the price of, let's say, ETH to go up. You're also, by stockpiling a huge amount of ETH, you're also able to stake that and earn huge amounts of revenue. Obviously that means a big return for these companies, which is what stockholders want to see.
Exactly. Right? It's just passive yield in a risk on market, right? Like it's also sets up potentially like the biggest bubble we've ever seen. If things ever do crash, you got to be concerned about these companies holding potentially billions of dollars of these like highly speculative assets. Like what happens when we have a downturn in the market?
Well, that's what I want to know. It's like, are these companies, because they're committed to stockpiling it, or so they say, does that mean these crashes will be less severe because these companies are less likely to unload huge amounts, because they're unlike retail where we're just like, shit, let's sell as soon as we can because we're freaking out. These companies, obviously have the teams and the research behind it to say, no, we're sticking for the long term, or what does that look like?
Yeah, 100%. Like it's something we won't know until it happens, but it'd be interesting to see. I think, for sure, exactly what we're sort of saying is like we're seeing all-time highs across a lot of these assets that are being utilized. Keep looking at that trend because it's not something that's going to stop. The market's got to knowledge that this is happening. So as long as it keeps happening in higher volumes, like I think we talked about it last time, staking is the main reason why they're buying these assets, because you can generate a passive yield, generate revenue for shareholders. The ETFs will soon have staking natively built into them. We look at all the analysts and what they're saying about the ETF. So again, like you've got companies that are doing it now themselves, but soon you can have companies that can just hold the ETF and get the same result. So it seems like there's still a bit more of an accessibility play that will play out, and you might see this still keep going as a trend. It's a big one.
I actually see this as sort of the big narrative of this cycle, at least to kick off alt season. Then we might start seeing the category narratives play out. But we've seen the likes of coins I just mentioned, XRP, Solana, Sui, and Hyperliquid. They're all coins that we've talked about at length as being strong fundamental projects, right? And obviously these treasury companies see the same. Like they're not just diving into these head first, with no research. They're actually looking at these and being like, these are strong projects, which obviously have strong adoption, strong usage, heaps of transactions flowing through them on a daily basis. That equates to value. So I know the BitGet Wallet CMO said holding tokens like Sol or Sui isn't about digital gold. It's about betting on transaction-heavy, developer-rich networks that power real consumer and DeFi use cases.
And when you think about all that regulatory clarity that we got 2 weeks ago now out of the US, that there is not going to be these sort of sanctions thrown on a lot of these assets. It looks like there's going to be more of an emphasis on capital investment. Actually creating use cases now is hopefully the focus. There is a situation where, maybe there's actually value locked into a lot of these protocols. We won't see that capital outflow because there's actually something for it to go into, park into. Like real world assets we've talked about to death, but if all of a sudden bonds are tokenized on chain, all of a sudden, even when you're not in crypto, you want to be in bonds, well, you might do it on a blockchain because the utilization is better. Like you might get daily compounding.
Well, it's more accessible, right? It's a 24-hour market.
Exactly.
As opposed to, 6 hours a day, 5 days a week.
Tokenized stocks, all that jazz. So, yeah, really interesting 12 months, I think, just to watch play out. It's going to be pretty wild.
Absolutely. And I guess we'll try and keep you guys notified of any other new treasury companies that are coming out. Let's say, on the likes of meme coins or any other coins that maybe, we haven't spoken about before.
Wouldn't put it past anyone.
Because currently it's sort of that top 20, but will that trickle down into, say, top 100 coins and, these companies start to take on more risk and then opens up the stock market to these more, risky coins.
You could get NFT companies, like people buying NFT, like treasuries. Who knows? Anything's possible.
Let's launch our own Pav.
Maybe we will. But some other big news coming out of Washington, D.C. this week. Earlier this year, when President Trump signed, that executive order to start a working group to basically recommend how crypto should be utilized by the U.S., that report is basically due on the 30th of July. So what's that? Today is the 29th. So 2 days from today, which will be a day before the podcast releases. So pretty good timing. Now, obviously, we've seen a lot of clarity around stablecoins recently, just even market maker rules with the Clarity Act as well, some commentary on CBDCs and how they won't be applied. So a lot of these recommendations that the working group will be coming up with, releasing, will probably breathe a element of each of those and how the US should go about navigating those bills and what sort of policies they should look to enact to try to stimulate digital asset growth as an economy, right? But I think one of the more interesting pieces that haven't been talked about for quite some time, the national stockpile. So the whole Bitcoin reserve, etc. Yep. There's a good chance, we don't know, but there's a good chance that there might be the latest update to that particular element. And one thing we've known about is obviously they're looking to take seized assets and put them on the balance sheet. But there have been little drops of rumors throughout this whole last couple of weeks that they're talking about an acquisition plan. So how do they take revenue that they're producing and put that into purchasing more Bitcoin? Like, is that even going to be a thing?
Yeah.
Now, I think, again, when we talk about the technical setup that I was sort of referring to earlier, we're seeing Bitcoin dominance really at a swing low right now. Some really good buying on this weekly close that we just saw. Really could set up the scene where I think we do see Bitcoin being the next big one to move off the back of something as big as the US committing to a plan to buying Bitcoin. Like, I mean, that's as good of an endorsement as you get, I feel.
That would be the biggest catalyst that we could ask for at this point in time in the market.
That's how we get heaving and moving. Like, that's that real big candles going potentially. Like, we don't know, but again, if we're trying to, like, as investors, as traders, try and work out what are things we should be paying attention to, this is the week. So that's what I reckon is a big one to just be really mindful of.
So some really good news coming out of the US. Like last week, those crypto bills getting signed off, or getting passed by the Senate at least. I guess what's next week? Like there's something every week, hey?
Well, yeah, but there's a big one. So yeah, again, by the time this podcast releases, the news will be out. But if you hopefully we've got something to celebrate come Friday this week.
Yeah, we'll try and post on the Instagram or just on our socials to give you guys an update. So make sure to follow us there.
Big one. That's my juicy one for this week.
Cool. I actually missed, while we're talking treasuries, I wanted to call out something pretty key. And just a quick little one because I thought it was interesting. So one of the ETH treasury companies, which is Bitmine Immersive, so they're one of the publicly traded ones. So they've been consulting research firms on ETH's valuation, and they estimate the price to hit $60,000 per coin. So I just saw that on Twitter. I don't know what the time frame is on that, which would have been helpful, whether it's next week or
that's
10
pretty
years
good
time.
advertising, right?
But 60,000, like what are we, 3,900? So it's a good 18x. Someone do the maths on that.
Imagine what that would do to the rest of the space if.
It'd be ridiculous.
But yeah, they likely they're not predicting a year from now. They're probably talking 10 years from now.
Exactly, and obviously they have a vested interest.
Exactly.
They're the consulting research firms, and they're heavily invested in ETH. Like they want that to happen.
They want that fact sheet to look good.
Yeah, but then on the flip side, would they be in it if they didn't think that?
True.
So maybe
there's upside to capture, I feel.
Yep. Cool. Pav, do you want to finish us off with this nice little off-the-cuffer?
Yeah, I thought, having the few off-the-cuffers we've had lately, I just wanted to point out this week, again, there's been another Satoshi era Bitcoin whale exiting their position. So 80,000 Bitcoin was sold off the back end of last week. So, a lot of people are pointing to that's the reason why the market went a bit stale. Saw a bit of
That's
inaction.
$9 billion in Bitcoin.
$9 billion of Bitcoin.
And when you say Satoshi era, you mean like it's one of the OG wallets from
Correct.
when Bitcoin was created, like 2009, 2010.
That's right. And we talked about another one liquidating, I think, 2 weeks ago or exiting their position.
Yeah.
So again, the way that they work this out is using things like on-chain data to work out how long this wallet's been dormant for. But yeah, they've got to, again, pay some respect to that. $9 billion holding this long, finally exiting. Not
Yeah,
bad.
so Galaxy was the one that executed the trade,
Yep.
and they confirmed the sale was for a client's estate planning. So
Yeah.
I'd like to be one of their grandkids, or
One of the could be descendants a couple of years down, I reckon.
yeah,
But yeah, just it's good to see people cashing out to some degree. Like, as much as it does take a bit of a dampener on the market, it's people made a call back in the day when it probably wasn't very easy to make, and now look at them.
when you and I were just
Yeah.
blissfully unaware that this thing that could make us billions of dollars was around.
Yep, too busy playing RuneScape.
Oh man, tell me about it. Alrighty, well,
That's a wrap, I reckon.
yeah, that is a wrap. Let's leave it there, and we'll make sure to keep you guys updated next week. Actually, I am off on
you're away.
holidays from
Yeah.
next week, so Tommy's going to jump in the hot seat for the next couple of weeks.
We'll have a few more guests as well.
And then I will be back or will I be back?
I don't know, mate. Tell me.
Maybe I'll sail off into the sunset, in the Turkish beaches.
Okay.
Not getting a hair transplant, not yet.
Yep.
Maybe one day down the track,
Yeah.
but just there
Just-
for a wedding,
just
just to
us
confirm.
Mate, but enjoy Turkey.
Appreciate it, mate.
No worries. Thanks,
See ya.
guys. Catch ya.